So, Nelly, I think first of all, we got to appreciate that gold is at a good place right now at 2,700. Um, what we've seen is a reaction to an uncertainty in the United States. I think that big drivers of gold are still going to be de-dollarization by central banks. In the last 2 months, we've seen the Western investors come into the ETFs with ETF inflows. And we've still got that big overhang with the indebtedness of the developed economies in the West and the softening of the China economy. So still very bullish for gold as we sit today. And I think everyone's waiting to see what the new president of the United States says about, and more importantly, what he does, given what he promised through the elections.
Yeah, I wonder, Mark, about gold's role as an inflation hedge. Certainly, yesterday's event, while maybe not surprising for markets, certainly was a surprise to, pollsters and I think many in the media. And you did see rates rise dramatically in the bond market on expectations of inflation due to tariffs. We don't know if that's going to happen. We don't know if they're going to actually cause inflation. Nonetheless, that's how the bond market interpreted it. Why doesn't the commodities market have the same interpretation? Why don't we see, a knee-jerk jump in the gold price when we have what most people expect to be an inflationary event?
So, Matt, I think that you saw confused indicators in the markets across the whole market, and I think what it was is, first of all, a message that people felt that maybe the Republican Party, and particularly Mr. Trump, was good for the economy broadly. But then, to your point, there are these uncertainties, in particular his statements around tariffs. I think there's a broader base that drive a broader set of indices that are driving the gold price, and that is that inherent global economic risk. And that's been the fundamental driver of gold now for well over a year.
I also want to switch gears and not just talk about gold, but also copper, a place that you have been diving even further into, and wondering what a Trump victory means for the copper market, particularly with the policies that he had said he would put in place, particularly when it comes to any setbacks to the energy transition and tariff strategy.
I think, Sonali, the copper is a fundamental metal. I always say copper is as strategic as gold is precious, and it's a fundamental metal in any construction-led economy, and definitely we're going to see that. And I think the world is going to be short of copper. So I don't believe that Mr. Trump and any policy introduced will impact the demand side of the copper equation in the medium to long term. In the short term, we're going to have lots of interference in copper, in that we have a brief period of projected oversupply before that demand equation kicks in. And I think that'll be compounded by everyone waiting to see what the policy of the new government in the United States will be. And we've still got China on the other side, producing lots of metal, putting it into the market, but on the back or on the basis of a softer economy overall.
I wonder what has been the driver in real terms, in direct terms, of the rise in gold prices. Is it government gold buying? Is it central banks around the world? I mean, you said something to the extent of, it's a hedge against economic uncertainty globally. Who are your biggest actual buyers?
So, Matt, the biggest are the central banks de-dollarizing their reserves, so shifting some of their reserves into gold, and we've seen that going on for a while. What's been interesting up until 2 months ago is the absence of investment into the ETFs, and that's really the way the Western investors invest in gold. And then you've got the big owners of treasuries, China and Japan, to a lesser extent. And we've seen all those holders of treasury bonds lightening up on US dollars. And a lot of that goes back into gold. And then you've got all the other drivers as far as overall risk. And one of the biggest risks that people haven't really focused in is the budget deficits we see across the Western economies.